Good day, YouTube. This is Jay Money with Falling Forward Financial. Just come across this article. Couldn't resist doing a video on it. It sounded kind of interesting. Might give everybody out there some hope or some different ideas, or maybe you're already doing this. So, reading through it kind of gave me some ideas. As you can see, this just came out yesterday. And as we know, the market's been dropping, been going up, been volatile, but this is how to get rich when the stock market drops. And as you can see, just came out yesterday, so volatility has been a major factor here as of lately. But those of you that are making money on it going up and down, so amen to you, and good luck going forward. But volatility in the global financial markets triggered by the conflict in Ukraine has investors concerned about a potential U.S. recession in 2022. The Spider S&P 500 ETF SPY is down more than 10% year to date, while crude oil prices have risen to a 13-year high. So just what we don't want to hear, but it's the truth. In volatile times like these, it's understandable for investors to be concerned about what will happen if the market actually crashes like it did in early 2022 or late 2008. And I'm sorry, but Obama, so Obama's president, not Biden, so Biden hardly even knows what's going on, so I feel Obama's still calling the shots, so just speculated, so while it may seem like fortunes are made during times of extended bull markets, it's often the case that a long-term investor's actions during the worst periods of the stock market are what set the foundation for future wealth. Investing in a recession, Baron Rothschild, a 18th century British nobleman and member of the Rothschild banking family, famously said the time to buy is when there's blood in the streets. And so I agree. I've been buying some stocks, not heavily, but buying a little bit here and there, and hopefully they don't go down after I buy them. Some I'm just experiment with to see where the actual bottom is. So, but as you know, I'm in Omaha along with Warren Buffett, a billionaire investing legend and CEO of Berkshire, BRK.A, and BRK.B. Has his own famous version of the Rothschild quote. Can't talk today. We simply attempt to be fearful when others are greedy, and be greedy only when others are fearful. He wrote that back in 1986 in the shareholder letter. Buffett reportedly made more than $10 billion investing aggressively during the financial crisis and the 2011 European debt crisis. Buffett invested in blue-chip stocks like Goldman Sachs, GS, Bank of America, which I've finally gotten into the green since I've had Bank of America, and the Dow, DOW. So you can list in the comments if you've had any of those. So Ackman's 19 trade, Bill Ackman, the billionaire CEO of Pershing Square Capital Management, took things one step further during the 19 sell-off in the early 2020. Ackman hedged against the possibility the pandemic would trigger a market crash, purchasing $27 million in securities as a hedge against a sharp drop in corporate bond market. It may seem like the large bet, but it's actually a very modest position for Pershing, which was managing more than $13 billion in assets in 2020. So very interesting strategy. But he cashed out of his hedge for $2.6 billion, more than 100 times his investment. So that's amazing. He then pivoted to the Buffett mode, scooping up cheap Hilton hotels, HLT. I didn't even think about that one. Lowe's, LOW. I like Home Depot better than Lowe's, but maybe Lowe's was the one to get into. And Restaurant Brands International, QSR. I believe they have Burger King and several other ones. So if you're looking to get into Burger King, check out QSR. Again, I don't give tax, legal, or trading advice, just state my opinion. By the end of the year, Ackman had turned a $3.85 billion profit by playing the drop and the recovery. So people made some money, so I didn't make that quite that much, so that's a pretty good amount. So the father of value investing and early mentor of Buffett once described how to successfully navigate market cycles by taking advantage of excessive pessimism. So there's some good information in here, so you can see how you can make money in a bear market. You make the most of your money in a bear market. You just don't realize it at the time until things go back up. So I've made videos here. How I bought, I just did a video on American Express yesterday. I think I bought it for, I don't know, 50, 60 bucks, or maybe it was 90, no, 90, and now it's like 180. I was buying Discover for $39, $40, and now it's $100. It was $120, but it's down a little bit, but still a decent return. So Benzinga's take, the one common trait that all successful bear market investors have is that they buy high-quality companies, not necessarily the stocks that drop the most during the crash. S&P 500 has always eventually recovered from every recession, but the same cannot be said for many lower-quality companies that do not have a cash flow and balance sheet strength to survive and make it through the next economic expansion cycle. So just thought that was an interesting article. But if you have any of those stocks or invested in them at those times, you can list that in the comments. Like I said, if you have any of these, or Berkshire, or any of the stocks listed, Bank of America, you can list that in the comments as well, but just thought this was an interesting article. And I thank you for watching, and if you haven't smashed that like button yet, go ahead and hit that for me, as well as subscribing, and hit the bell so you're notified of when the next videos drop. Again, this is J Money, Falling Forward Financial. Happy trading, happy investing, stay green. Cheers.